I'm Jerry Slusowitz. Welcome to another one of my Money Talks videocasts. Today is Monday, July 16th, 2012. We update these things occasionally, or as markets warrant. It's just been a little while since we did our last update, so we're doing so now. We've done very, very well so far on the year. We've made some very, very good calls. We saw the LTRO at the end of last year in December, which was a European form of quantitative easing. That bailed out a lot of their banks, some of their sovereigns. It really stopped probably, what a lot of people thought, a couple of banks from going under. That is what propelled the market at the beginning of the year. We had a nice trajectory up to start the year. One of the best starts of the year in 12 to 18 years, depending on which index you're looking at. But it was a great first quarter, and we rode that thing fully invested. Then we started to get concerned seeing the Greek election, seeing the interest rates in Italy and Spain going up higher and higher. We thought that Europe was going to become a problem, and we were right and justified for feeling that way. So from April to the middle of June, the markets dropped precipitously, probably around 9.5%. Not quite the 10% correction, but very, very close to that. Some stocks got hit harder than others, etc. Some of the banks were down 30% here in the U.S. We had lightened up tremendously, avoided much of the downturn. So now here we are in the chop. The chop is when the market's kind of chopping around, lower, higher, certain sectors getting taken out to the woodshed, beaten up. But we've recently started to add some very high yielding positions to our portfolio. We're very defensive. Utilities, we've got REITs, we've got healthcare, a little bit of biotech, a little agriculture, but we've got a few different things that are paying very good dividends, on average 6.5%. So for those out there sitting in money market, sitting in cash, CDs, wondering what to do, you're looking for yield, you need better yield, better return, better income, give us a call, 800-449-9501, 800-449-9501. My name is Jerry Slusowitz, Companies Pacific Financial Planners. Now the call going forward. What we've seen is when that market bottomed and based out in the bottom in June, we've seen a couple of higher lows and we've seen a couple of higher highs in place. The market coming into last week was down 6-7 days in a row, or through last week, and sure enough, last Friday, without breaking down, the market kind of skyrocketed out. Decent volume for what is accounted for summer volume here in 2012, and we formed what's called a triangle pattern, where you've got a system of a pennant, if you will, looks like a flag or a pennant, one of those three-sided pennants, and the flagpole is going back to last October, and it's positive. Generally, this is a bullish pattern, is a bullish pennant pattern. So we're thinking we're going to get a late summer rally. Above 1374 on the S&P would signal the start to that rally. Below 1300, we would raise the white flag and call a truce, and we'd probably lighten back up again. We're around 1350 today on the S&P, so we're looking for a breakout to the upside to run at least for a little while into the fall of the year. We'll keep updating these things as we go along, but if you need more information, sign up on our website, www.yourmoneytalks.com. Catch my radio show now on Monday through Friday, KSSD, KSPA here in Southern California, 2 channels, 8 to 9 o'clock. In the morning, Monday through Friday. Sign up for that email newsletter, www.yourmoneytalks.com, or for more information to get your free portfolio review, 800-449-9501. That's 800-449-9501. Put my 25 years of experience to work for you of defensive investing, tactical approach, being in when you should be, and releasing and relieving the pressure when it gets too great. Please call, tune in next time to one of our Money Talks video casts in a month or whenever we see fit based on market conditions.